All right, so I'm going to go over the earnings trades, and the first one I'm going to go over is CLF for earnings. Cliff, and this is a global growth play, so it's going to tell a lot about global growth. So let me just put this in here. Stock is currently trading $36.75. And I go through the HIM Cribbit trading plan. How much has the stock moved on the last 8 quarters? Down 10.5%, down 6.3%, down 5.3%, 0, up 4.8%, down 4.3%, down 3%, and up 7.1. So if I look at the common trend or the common pattern here, the stock has sold off 5 of 8 quarters and didn't move at all on 1 quarter, but the last 3 quarters has gone down every single time. Let's look at the implied move. So the 37 at the money straddle. So let me get rid of this real quick. So I always look at the implied move. How much of the market's implying the stock can move on earnings? So the 37 at the money straddle is $2.35, which is implying a 6.4% move. 6.4% move. I'm going to have 2 measure move targets. I'm going to have an upside measure move target. I'm going to have a downside measure move target. So my upside measure move target is $36.75 plus that $2.35. Which gets me at $39.10. And then I have a downside measure move target, $36.75 minus $2.35, which is $34.40. So I'm going to look at a put fly, a possible put fly, and I always want to sell the measure move target. You know, I've been selling some bearish call spreads. That hasn't been working out, and I've been losing money. You know, a put fly is going to give me a better reward to risk setup. So let me bring up my option chain here and talk about a put fly in Cleveland Cliffs, implying the stock's going to sell off, and if it sells off, you know, maybe it'll sell off that 6.4%. If I would look at a chart here, you know, I can rationalize saying that it's going to trend lower here. You know, I've been trying to sell call spreads, you know, here, and I've been losing money. So I want to get a good reward to risk setup. In put fly scenarios, set up good reward to risk scenarios. So let me look at a put fly in CLF. So I'm going to bring up CLF here, and I always want to be selling the measure move target. So I want to be selling the measure move target. The stock has sold off 3 earnings in a row. I don't know if there's dollar strikes or $2.50 strikes.
Somehow Scott Wapner was here in New Jersey yesterday.
So this is good because there's dollar strikes. So I'm going to be able to put on one, and I want to sell the measure move target. The measure move target to the downside, we just talked about that. The measure move target to the downside is going to be 34.5. Okay, so I'm going to be looking at maybe the 36.5, 34.5, 32.5 put fly. Okay, so I'm going to be looking at the 36.5. So let me look at this. 36.5. Buying the 36.5 puts. Selling twice as many 34.5 puts. And then buying the 32.5 puts. See what price I can put this on for. This is a $2 put fly in Cliff. 36.5, 34.5, 32.5 put fly in Cliff. This is a put fly for earnings. And I'm going to have someone get rid of all this stuff up here because it's way too slow. And I bring up my option montage. So this is a bear put fly for earnings. 36.5, 34.5, 32.5 put fly. As I look at it, it's probably worth 125 minus 80, maybe 35 cents. So I think it's a good risk versus reward setup. So let me bring this up in Cliff. I will go over Nile as well. This is just so slow. I mean, I have like 125 names up here, so it's kind of just slow. I might roll it down. Okay. I don't want to pay 45 cents for a $2 put fly. I'm going to roll it down a little bit to the 36, 32, 36, 34, 32. So I'm trying to roll it down by half a strike. It will get cheaper then. So buying the 36s, selling twice as many of the 34s to buy the 32s. So I'm trying to roll it down to the 36, 34, 32 put fly. Just trying to get a couple different prices. I always set up everything like as a risk versus reward setup. And I want to see the risk versus reward on this. So on this trade, I'm trying to buy the 36s, sell twice as many of the 34s, and buy the 32s. Okay, so this is a different put fly. Just rolling the strike down by half a tick. I hit add, I hit OK. Let me just see where this one's priced at. I like this one better. So I'm going to put a bid in here at mid-market. I'm going to put a penny above mid-market. So I'm going to put a 39 bid on this one. 36, 34, 32 put fly. I'm going to put a 39 bid on for it. I've not got filled on this. So this is CLF 4 earnings. This is a put fly. So my put fly is buying the February 36, 34, 32 put fly for 39 cents. Okay, this is the same thing as buying the Feb 36 puts. I could say I'm buying the 36, 34 put spread and selling the 34, 32 put spread. If you guys want to help me on this trade, what is my risk, my reward, and my break even of this trade? What is my risk, my reward, and my break even of this trade in Cliff? CLF 4 earnings. This is a put fly. I'm bidding 39 cents. I'm not going to move my my price point up. So if I don't get filled, I don't get filled. But if you guys want to help me with my risk, my reward, and my break even, if not, I'll just fill in all the answers. So this is a Cliff put fly for earnings. My risk on this trade is very easy. The most I can lose on a put fly is the 39 cents. The most a put fly can be worth is the price, the difference between the highest strike price and the middle strike price. So the most this thing it can be worth is $2 minus the 39 cents I pay for it, which is $161 per one lot. I'm going to always have two break evens on a put fly. My break even, my lower break even. Okay, so let me try to put this in for you guys. This is a great tip or trick to figure out break evens. So my break even of a put fly, okay. The lowest strike put plus price of spread, which is 32.39. The highest strike put minus price of spread. Okay, which is going to be 35.61. So a little tip or trick for put flies, how to figure out break evens. You know, it's one of the hardest things to do is to figure out a break even. So the break even of a put fly, the break even of a put fly is going to be the lowest strike put plus the price of the spread, and then the highest strike put minus the price of the spread. Okay? So these are the two break evens for this trade, and I would make money anywhere in between. I would make money anywhere in between on the spread. So on this trade, my risk is $39. My reward is $161. This gives me a 4-to-1 reward versus risk setup. My break even, we just went over those, is going to be 32.39 and 35.61. My time period is February, and my target is at the measure move target to the downside, which is $34. So my target is that $34 level. Does anybody have any questions about the spread in CLF? Does anybody have any questions about the spread in CLF? I have not got filled on the spread. I am currently bidding it. I'm not filled on the spread. I'll do it when he gets back. So I'm going to say this for you guys. I've not got filled on the spread. So this is CLF 4 earnings. This is 2/12/2013 CLF HIM Cribbit. So I have not got filled on the spread. I'm currently working this order. This is a put fly for earnings. You know, we've seen it sell off 3 quarters in a row. I don't want to sell bear call spreads. I've gotten burned on selling bear call spreads. So this is a possible trade setup for Cliff. Okay, I have saved that. No one has any questions. We'll move on to the next trade for earnings. And the next trade for earnings is going to be NILE, N-I-L-E, Blue Nile. So very, very similar thing. I just go through the HIM Cribbit trading plan for NILE. So let me bring this up. In NILE, N-I-L-E, 4 earnings. So this is another really hard one to do, and I might not even take a trade in this. Stock is currently trading 30.27. Over the last 8 quarters, the stock moved 0.2%, 34.7%, 10.7%, down 10.3%, down 32.8%, down 3.2%, down 7.3%, and down 12.2%. So over the last 8 quarters, this has been a very, very volatile one. You know, it's moved 30% twice. It's moved 10% 3 times, and then twice it didn't even move at all. So I think this is a very, very hard one to trade. I'm 100% not going to trade this one on earnings. Put or call fly candidates are not good risk versus reward setups. Buying premium doesn't seem like that's a good setup. I don't want to be buying premium as last time the stock didn't move at all. I don't want to be selling premium because stock has moved a lot. You know, based on the chart, maybe kind of like Expedia, a deep out of the money call spread or deep out of the money put spread might be a good candidate. But this is a very hard one to trade. I would want to risk a little bit to make a good reward. So I'd want to risk a very, very little to make a great reward. So let me see if there's possibilities of trades I could come up with. So the stock has sold off 4 times. It's 5 times. It's rallied 3 times. It's moved 30% twice. It's moved 10% 3 times. And then it's moved not at all like twice as well. So this is a very, very hard one to trade. So let me look at choices in NILE. Let me look at the chart to see how the chart looks. I'm going to have 2 measure move targets based on the at the money straddle. So let me bring up the at the money straddle in NILE, N-I-L-E. The S&P is making a higher high today. So this is NILE for earnings. Let me bring out the at the money straddle. So NILE, the 30 straddle. 30 straddle, 230 plus $2. 230 plus $2 is $4.30. So the 30 at the money straddle, we'll go back to my whiteboard here, is $4.30. So implying about a Let me take 430 divided by 30. It's about 14%. They're implying a 14% move. I'm going to have two measure move targets. I'm going to have an upside measure move target, which is the 30 plus 430, 3430. And then I'm going to have a downside measure move target, 30 minus 430, which is 2570. Let me see how the chart looks. Does the chart look bullish or bearish? You know, if it's breaking out to the upside, I could possibly rationalize, you know, buying an out of the money call spread. That's the 10 minutes of selling into the close. This is the daily chart. This is like walking in front of a freight train. NILE has sold off from 30 to 40. I think this stock is headed way lower. Let me pull up the weekly chart. I think it could hit possibly $25. So I think it could possibly hit $25. You know, I would look at maybe buying just a put spread. Straddle swap. You know, you want to make a straddle swap when you don't think the stock is going to move. This stock looks like it's about to break to the downside. Straddle swaps work well when you don't think a stock's going to move, like a Disney, like a Lionsgate, right? So I don't think this is a good straddle swap candidate. If the stock moves 14%, most likely I will lose on this trade. I think buying the 30-25 put spread, you know, is going to get me 2 to 1. So I'm going to look at this one. So buying the 30 puts to sell the 25s. Buying the 30 puts to sell the 25s. Buying the 30-25 bear put spread for earnings. I'm going to just bid a one lot on this. I'm going to bid $165 for a one lot. It's $165. And I think I'm going to get filled on it. I just got filled at $165. So I literally bid a one lot, $165. You know, usually most of my earnings trades are $500 to $1,000. Yesterday, obviously, I didn't do so well. So if I was going to usually risk $500 in this trade, I'm cutting back a little bit. You know, trade more when I'm winning, trade less when I'm losing. So I am in this trade at $1.65. So my trade is buying the February 30-25 bear put spread for $1.65. So I'm in this trade in NILE, very tiny position. So this is the same thing as buying the 30 puts and selling the 25 puts for a debit. Okay, so I am in this trade. My risk on this trade is $165 per one lot. My reward on this trade is $335 per one lot. It gives me a 2 to 1 reward to risk setup. It gives me a 2 to 1 reward to risk setup. My break even on this trade is 30 minus $1.65, which is $28.35. February, and my target is 26 bucks. It is their holiday quarter, so expectations should be pretty high. You know, the stock looks so weak. The stock looks so weak. So this is a bear put spread for earnings. Last time, this time last year, the stock, so it would have been it would have been this quarter, down 10%. So I bought the NILE February 30-25 bear put spread for $1.65, and I did this very, very small. I've been trading unusual option activity much better, so that means I'm going to be trading a little bit more on unusual option activity and a little bit lower on earnings. So this is a new position in NILE. February 30-25 bear put spread for $1.65. My confidence on this trade is obviously a 5. I literally did a 1 lot. So if I lose tomorrow, it's $165 I won't have to go drinking this weekend. So I'm in this trade in NILE. Does anybody have any questions about this trade in NILE? If not, we'll move on to the next trade. Okay. NILE. I'm in a bear put spread for earnings. The chart looks like it's going to break lower. Very, very sporadic earnings. You know, I don't want to sell call spreads because the stock rips 10%. You know, it'll happen like Avon where I sold call spreads for 40 cents. Avon's up 21% today. I mean, that's crazy. So does anybody have any questions about this trade at all? If not, I will save this and go on to the next one. So I'm in a bear put spread in NILE. All right, I will save this as 2/12, 2013 NILE HIM Cribbit trading plan. I got filled in Cleveland Cliffs at 39 cents. I'm in Cleveland Cliffs. CLF, I'm into the short side in CLF. Let me take off here and I'll put in this. So CLF, I got filled on my put fly. So I bought the CLF February 36, 34, 32 put fly for 39 cents. Once again, the confidence level is a 5 on this trade. So I am in the Cleveland Cliffs put fly. The 36, 34, 32 put fly in CLF. I'm in this trade. This is a new position. Okay, so I am in this trade. Fucking shit, man.